Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: the Philippines' trade deficit widens as imports outpace exports. Billionaire Ramon Ang's new NAIA Infrastructure Corporation plans to raise fees for VIP services at the country's main airport. Mint, the company behind fintech giant GCash, is on track to surpass the valuation of its parent firm, Globe Telecom. And Fast Retailing, the owner of Uniqlo, reports a third straight year of record earnings. First, let's take a look at how Wall Street did overnight. U.S. stocks pulled back from record highs after inflation came in higher than expected. The Dow Jones Industrial Average slipped by 0.1%. The S&P 500 shed 0.2%, while the Nasdaq stayed flat. The latest consumer price index shows that progress on lowering inflation may be slowing, leaving questions about what the Federal Reserve will do next. Even so, some policymakers aren't worried. They're of the belief that the Fed can keep on cutting interest rates.
The market was really driven by the CPI report, which on its face was very bearish. So printed hot, 0.2, 0.3 core versus expectation for just 0.2 core. But the market's response is pretty muted. And we actually think the market response should be positive, although we've had a big run. Because really, if you look underneath those numbers, the shelter component actually improved dramatically, which bodes well for the future reports, not PCE at the end of this, but next CPI. And the parts that printed hot were very volatile. So we actually are more bullish after their report. And that's somewhat reflected. If this was just a bad inflation report and shelter was still high, market would probably be down more like 50, 60 handles, or more like a full percent. And it's relatively flat today. So most people are interpreting the way we are. Still going to get Fed rate cuts. Inflation is coming down. And it's appropriate to be bullish on the future of the market.
In Europe, markets closed lower, with defense and industrial stocks taking the biggest hit. The UK's FTSE 100 dipped slightly, while Germany's DAX and France's CAC 40 both dropped 0.2%. Over in Asia, markets are mixed. Japan's Nikkei 225 is up by 0.3%. South Korea's Kospi higher by 0.4%, and Australia's ASX 200 is slightly lower. Over in the commodities market, oil is headed for a second week of gains as Israel prepares to respond to Iran threatening oil supplies from the Middle East. Brent crude jumped 4%, crossing $79 a barrel. Meanwhile, gold rebounded after 6 days of declines as traders watch the Fed's next moves on interest rates. Now, the Philippine trade deficit grows in August as the country imports more than it exports. According to the Philippine Statistics Authority, the trade deficit reached $4.38 billion in August. That's about 7% higher than last year's $4.11 billion. However, it's slightly better than the $4.88 billion recorded in July. Exports rose to $6.75 billion, but imports grew faster, reaching $11.12 billion. So far this year, the trade deficit is at $34.3 billion, lower than the $35.86 billion during the same period last year. A bigger trade deficit can impact the peso and the economy. This matters to businesses, especially those involved in imports or exports, as it can affect prices and costs. Foreign direct investments into the Philippines reached a 5-month high in July. Data from the Bangko Sentral ng Pilipinas shows that net FDI inflows grew 5.5%, reaching $820 million compared to $778 million a year ago. This is also more than double the $394 million inflow recorded in June. Most of these investments came from Japan, the United States, and Singapore, and were directed primarily to the manufacturing and real estate sectors. Since the start of the year, total net inflows have reached $5.3 billion, up nearly 8% from last year's $4 billion figure. Stronger foreign investments boost key sectors like manufacturing and real estate, supporting economic growth and job creation in the country. Now, the government is increasing its budget for education next year, but cutting funds for cash aid to poor Filipinos. The Department of Budget and Management says it's setting aside almost 970 billion pesos for education, making it the biggest priority. This makes up 15.4% of the planned 2025 national budget. Meanwhile, cash aid for low-income Filipinos will be reduced to 254 billion pesos, down from 319 billion this year. The government says that this is part of its plan to focus on long-term economic and social improvements. Billionaire Ramon Ang's new NAIA Infrastructure Corporation is changing how VIP services are handled at the Ninoy Aquino International Airport to improve security and efficiency. Previously, VIP services often used by celebrities and high-profile people were available for as low as 800 pesos. This created potential security risks and unfair advantages. Now, the NNIC will charge higher fees and offer customized packages for all passengers who want VIP-like services but don't necessarily qualify as official VIPs. This matters because it aims to make airport operations safer and fairer for all travelers while streamlining VIP services. Mint, the company behind GCash, could soon be worth more than its parent firm, Globe Telecom. This according to Globe's CEO himself, Ernest Hu, who adds that GCash's rapid growth is driving its potential. Mint is now valued at $5 billion after Japan's MUFG announced in August that it would invest around $400 million for an 8% stake in the company. For comparison, Globe Telecom, Mint's parent company, has a market value of $6 billion. Who also mentioned that the strong local stock market could support Mint in going public in the Philippines, though an IPO in the United States is becoming less likely. As of now, there is no specific timeline for when this listing might take place. This is important because GCash's growth could make it one of the most valuable companies in the country. An IPO would also offer new opportunities for investors while boosting the Philippine stock market. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. Right now, share prices are in the red. The market has fallen below the 7,400 mark. Right now, it's down by 0.25% to 73.92. Now, we are seeing profit taking after the market rallied in the previous weeks. Also, sustained appreciation of the peso, which is in the vicinity of a two-month low, is bogging down investor sentiment. Apart from that, there's also rising U.S. Treasury yields to contend with. In any case, consolidations are healthy, and analysts do say that overall the market's trend is going to be bullish. So that's the outlook for the local burst. In the meantime, we're seeing a bit of a healthy correction. All shares indexed down by 0.1% to 40.32. Financials, industrial, services, mining, and oil and property counters are all trading in the red. The only one in the green right now is the holding firm subsector. That's up by less than 0.1%. Meanwhile, at the foreign exchange market, the peso opened slightly stronger from its previous close of 57.36, opening at 57.30 against the greenback. Now, in other news, International Container Terminal Services, or ICTSI, owned by billionaire Enrique Razon, acquires a 27-hectare lot in Batangas province. The property, which is located next to their Bawan site, will be used for expanding their new 900-meter berth terminal. This move is part of ICTSI's $800 million investment in the new terminal, which is aimed at stimulating economic growth in southern Luzon and solidifying the region's role in global trade. ICTSI has stated that once completed, the Bawan terminal will be the second largest container facility in the country after the Manila International Container Terminal. This expansion is crucial as it will help improve the country's shipping infrastructure, making it more attractive to international trade and boosting local economic development. Now, Dito CME, owned by Davao billionaire Dennis Uy, gets approval to move ahead with its 4.2 billion peso follow-on offering next month, with shares to be listed on December 6th. Dito CME, the third major telco after industry titans Globe and Smart, was initially set to sell up to 1.95 billion common shares at 2.15 pesos each last month, but delayed the offering to give investors more time to consider that investment. Dito says they plan to raise up to 40 billion pesos in fresh funds through private investments until 2028 to help expand their network. This matters because Dito's expansion could bring more competition to the telecom market, potentially leading to better services and lower prices for Filipinos. The new funds will also help Dito improve connectivity across the country, especially in underserved areas. Now, Double Dragon, owned by billionaires Tony Tangkatyong and Injap Sia, tops off its Hotel 101 project near Mactan, Cebu International Airport. The 548-room development in Cebu, set to open next year, is already fully sold even before completion. Located on a 5,500 square meter lot near Mactan Marina Mall, this will be the largest airport hotel in the Visayas and Mindanao region. It's expected to boost tourism infrastructure in Cebu, a key destination in the Philippines. It also demonstrates the strong demand for real estate in the region. This project is part of Double Dragon's global goal to reach 1 million rooms by 2050, with 50,000 of those rooms coming from the Philippines. Now, here in Asia, Japan's Seven & i Holdings is creating a holding firm for its non-core assets as it shifts its focus to its main business, the 7-Eleven convenience store chain. This move is designed to boost corporate value while defending against a takeover attempt by Canada's alimentation Couche-Tard. The new company, named New York Holdings, will include 31 subsidiaries operating supermarkets and other retail shops, and it will be open to strategic partnerships. Seven & i will also rebrand itself as 7-Eleven Corp to highlight its focus on convenience stores. This comes as the company has been under pressure from activist investors to streamline and exit its non-core holdings. Still in Japan related, Japan's fashion giant, Fast Retailing, the owner of Uniqlo, reports a third straight year of record earnings driven by stronger profit margins in its international businesses. Operating profit rose by nearly one-third year-on-year to 500 billion yen, or $3.35 billion for the fiscal year ending in August, surpassing market estimates and the company's own forecast. Fast Retailing expects its operating profit to grow further to 530 billion yen in 2025. Uniqlo has benefited from a weak yen, boosting revenues both at home and abroad. The tourism boom in Japan has also led to a surge in duty-free shopping. Fast Retailing is the world's third largest clothing retailer behind Zara owner Inditex and Sweden's H&M. Over in Europe, consumer goods giant Unilever completes its exit from Russia, selling its business to local manufacturer, the Arnest Group. The sale includes all of Unilever's operations and 4 factories in Russia, as well as its business in Belarus, a close ally of Moscow. This comes after Unilever faced criticism for maintaining a presence in Russia, even though it was one of the first major European food companies to halt imports and exports to and from the country. The Arnest Group, owned by Russian industrialist Alexei Sagal, has benefited from several corporate exits from Russia, including acquiring the local operations of Ball Corporation, Heineken, and Oriflame. Looking at the bigger picture, this signals a growing shift among multinational companies to cut ties with Russia amid geopolitical pressures. Now, European banking giant HSBC is looking at ways to cut costs by as much as $300 million. The Financial Times reports that HSBC plans to combine its commercial and investment banking units, which could mean laying off senior management to save money. HSBC, Europe's largest bank, employs about 214,000 people worldwide and has been reducing duplicate positions for years to become more efficient. By streamlining operations, HSBC can stay competitive in a challenging banking environment, though it may affect jobs and perhaps the bank's services. We're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. China and the ASEAN agreed to improve their free trade deal after substantive talks in Laos. The deal, which will strengthen economic ties and make it easier to trade between the two sides, will be finalized by 2025. China, which has been ASEAN's biggest trading partner for 15 years in a row, is also a major investor in the region. In other news, Indonesia's President-elect Prabowo Subianto defends his plan to expand the government, which critics are calling a fat cabinet that could make bureaucracy too big. This comes as Prabowo plans to add around 10 new ministries and agencies, creating high-ranking jobs for politicians in his 7-party coalition. Set to be sworn in on October 20th, he says a large coalition is needed to build a strong and unified government. Some foreign investors, however, worry that Prabowo might spend too much and loosen fiscal discipline in Southeast Asia's largest economy. But a senior aide assures that he will follow the agreed spending targets for 2025 and stick to current budget rules. Now, this matters because changes in fiscal policy could affect investor confidence and Indonesia's economic stability. For the first time in sailing history, TV viewers watching the America's Cup will be able to see something no sailor has ever seen before: the wind and its strength across different parts of the course. This is made possible by technology called WindSight IQ, which uses lasers to scan the entrance race course off the coast of Barcelona and display it in real time on screen. Viewers and commentators will now be able to visualize exactly how the wind is behaving across the course as the race unfolds. The best-of-7 final of the America's Cup starts on Saturday, October 12th.
The wind visible. What we do is we place sensors along the coastline of Barcelona, which is where the America's Cup is held, and those sensors send out laser beams, okay, and those laser beams reflect off particles in the air like dust. And from those reflections, we can build up a picture of what the wind is really doing in terms of its speed and direction.
As a yachtsman, we kind of, if we're on the water watching a race, we kind of know what's going to happen. But when I am watching it on TV at home, and I can see the puffs, and then I see the effect that has on the boat, that is something that's never been done on TV before. And in that respect, it's absolutely a game changer.
And that's it for Basis Points. I'm Maiki Oreta. We'll be back next week for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.